Joining me now is Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, it's great to see you. Thank you so much for being here. And I want to get right into it. Your reaction to what you just heard and about the market's understanding of what's going on with this Iran war and its impact on the economy.
So the market are worried that energy prices will stay high. They are pushing yields up. And that's why we're seeing the 30-year above, the 10-year above 430, which means higher borrowing costs. And they're hoping for a quick end. That's phase one, Maria. Higher energy costs, higher borrowing costs. If we stay in that paradigm, and I hope we don't, then we're going to worry about lower growth. Then we're going to worry about a higher risk of financial instability and higher inflation. So we're still in phase one in terms of the economy. And the concern is, do we get to phase two? And you're starting to see this in the equity market.
Yeah, we sure are, because oil prices are spiking, and I am fully expecting that we're going to hear this when the first quarter reports and the second quarter reports. Well, it will be the first quarter reports, I guess. February is when this started. We're still in it right now. So when we get the first quarter reporting from corporate America, they're going to tell us that their costs went up, aren't they? Oil prices are up where they are, so that's going to show up. What are your expectations in terms of what this goes, where this goes, and what kind of an impact it's going to have on the economy? Because yesterday we heard from Jay Powell, on Wednesday. We also heard yesterday from the Bank of England. And it was very stark difference in terms of what we heard from both central banks. I want to get your take on that, because the Bank of England was very clear. Inflation is an issue. And the betting went from markets expecting rates would be getting cut to the rates would be getting hiked from the Bank of England, right? And let's take a look at that graphic that you all put together for me so that we can show this on air right now. And Mohamed could tell us his stance in terms of what you heard from the Bank of England versus what you heard from the Federal Reserve. Here's the graphic. Bank of England's Andrew Bailey said war in the Middle East has pushed up global energy prices. You can already see that at the petrol pump, and if it lasts, it will feed into higher household energy bills later in the year. Mohamed, what did you think about the Bank of England statement versus the Fed?
So we had three central banks this week, plus the Fed. The three central banks, the Bank of England, the European Central Bank, and the Bank of Japan, did not hesitate. They said exactly what you just showed. Higher energy prices could well translate into higher inflation, and we are worried about that, and we are keeping an eye on that. The Fed has not really wanted to talk about this, and you heard it again with Governor Bowman. This is part of the Powell Fed. The Powell Fed has been backward-looking rather than forward-looking. And it has been very hesitant after its huge inflation mistake in 2021, 2022 to be forward-looking. And that's why there's this notion that it's always behind the curve. The markets for the single mandate central banks, meaning the Bank of England and the ECB, have, as you pointed out, priced in hikes. Part of that is because Europe is not energy independent. We are. So we worry here about higher prices. They worry there and in Asia, not just about higher prices, but about will they be able to secure the energy? Will they be able to get the gas, get the oil? And that's why you're seeing a much bigger reaction there than here.
Well, what's going to be the impact here from the disruption in the Middle East, do you think? Because I know you've got an op-ed coming out next week in the Financial Times. And I look forward to that op-ed because I want to get a sense from you of if, in fact, the big spenders in the Middle East will be changing their behavior post this.
Yeah, and this is a really important point because we all fixated on energy prices. That's the clearest thing. But we have to remember that that part of the world plays an important role in several areas. It is a major transport hub, so people are starting to worry about fertilizers, about helium. Helium doesn't just go into children's balloons, it goes into semiconductor. Fertilizers are needed for the planting season. So people are starting to realize there's a broader issue. And then you're absolutely right, there's the financial aspect. That part of the world generated surpluses in the last 4 years of 800 billion, and they put that back into the capital markets, buying bonds, providing AI funding. For a while, those countries will have a lot less money to put out.
Wow. Any takeaways from the Mickey Bowman interview, Mohamed?
Yeah, fascinating interview. Thank you very much for doing it. As I expected, she said they're looking to modernize the capital framework in order to get more money into the productive economy. But you broke news on three fronts. One, she said to you, they're looking to bring back activities from the non-banks to the banks, because they're now worried that the non-banks aren't regulated well enough. That is new.
Yeah.
The second thing she said was about the importance of our banks being competitive to the rest of the world. And then the third thing is the review of what happened in Californian banks. This Powell Fed has been very hesitant to use external reviews. So it's good news that she is willing to have an external review of why the Fed messed up on that.
I love it. Mohamed, great to talk with you. Thanks so much for weighing in on that. We will see you soon. Mohamed El-Erian will be right back. Stay with us.